wasn't holding you. I can't see the end, but we'll see it through. Times don't fly too high. Be sure to keep the ground in sight. Fly forever if you keep it tight. Love the world but keep the sky on your mind.
Note here, which after the market take out this buy side liquidity, there is a break of market structure here. So it's good to note that break of market structure. Yeah. So let's get to the higher time frame from daily and see how the market is behaving on a daily time frame. So as you can see, we are on a bearish move, but mainly our target was here. This week we are anticipating the market to take out this daily sell side liquidity, which it has not yet taken out our daily side liquidity. But looking at how the market is reacting, we're anticipating it to take out. When we take out this low, that's when we know we absolutely going to take out this daily side liquidity. But for now, we are on a neutral position for now. Let's look at weekly and see how the market is behaving on a weekly time frame. Yes, you can see the weekly also. So and today is Friday, so this mostly is the closing of the week. So this weekly candle, they can either come and close here on this daily side liquidity, or using the power of 3, there is accumulation, there is accumulation, manipulation, and distribution. So this candle, it's opened up here and rallied up, then distribution here, and it can come up to here and rally then up to close the weekly candle. Don't know if you're getting what I'm saying. Let me repeat that. So you can see the market, this is the market opened here in this weekly candle, rallied up, then down again, to this point, and then rallied up. So it may continue down to take out this daily sell side liquidity and then rally up to close a good weekly bearish candle. So with that information, go to 4 hours time frame. Mostly on Friday movement, if it was a bearish week, Friday tends to be a reversal movement in the New York session because the market have been trending on a bearish move. Now there is a bit reversal to close. So in this scenario, you might be accepting a reversal or a continuation to this low of the previous day, and mostly to the daily sell side liquidity here. Let's keeps our gas on the pedal for now, our brakes, our pedals, our legs on the brakes for now, and see what's going on for 1 hour time frame. So should be having the same. So you see, this is a classic scenario where the market can retest this point where there is a bullish order block or the breaker. You see the break of market structure. You turn to it can retest the breaker and then continue on a downward trend. Check out this previous. Remember, market using this strategy, the market always tends to go toward the high of the previous day, the low of the previous day. You can look here, the high of the previous day was here, and the low of the previous day, and the market came and take out this low of the previous day here on the New York session. The same scenario can apply to here. This session can take out the low of the previous day, because this and why the market is going to the high of the previous day and the low of the previous day. Remember, this market run with algorithms, and those algorithms always head to take out the liquidity. Where there is liquidity, most probably there the market will head towards. So let's look at 15-minute time frame. So generally in this time frame is where I just watch the market and see how it's behaving. Let's go and look at the DXY dollar and see what's going on in the dollar. So this will be our previous day high, HPD, the previous day low. And call it low the previous day. And so in this scenario, in dollar, you can see the market opened up in Asian session, and in London session took out the low of the previous day. Then there was a shift in market structure, break in market structure. Yeah, market structure. And so there is a high probability the market will head to this high of the previous day. So that's our strategy. And this confirmation makes us now have a high probability that the dollar, the euro dollar, might head to our previous low of the previous day. So for buyers to be correct, the market should not pass again here on the previous day on this break of market structure. So the market shouldn't pass this area key level if our bias is correct. But mostly this strategy work well when the market is trading either on the low of the previous day or the high of the previous day. When the market reached these levels, we look for either for a continuation to the upside or a reversal to the downside. Also in here, when the market is reacting or up, the market has reached to the low of the previous day, we look for a continuation if it's a bearish move or a reversal. Like on a DXY, you can see this was a very good reversal trade. Would have entered here in the London session and aim for the opening of the day. So we only take trade, all our setup only being is capitalized when we reached onto the low of the previous day and the high of the previous day. And because the market have already reached on the low of the previous day, we are on a neutral position. Because the market is on a neutral position also, it's behaving between the low of the previous day and the market daily open of the market. So we just have to be patient and see how the market is behaving. So let me keep it. Okay, let me put a full screen on the stream. Sorry for that. Connect my laptop to the charger.
The Bluetooth device is ready to pair. The Bluetooth device is connected successfully.
So let us look at SD card. See how SD card is reacting to the market. So this will be our high of the previous day. This will be a low of the previous day. So these are low of the previous day. So you can see in this price movement, and here that there is a break of market structure. So actually this price movement here just happened on the New York Open. So in this case, market might return here to a fair value gap and then continue moving down. So obviously this will be an entry if it was on a London session, because as you can see here there is break of market structure breaking this previous day low and then acting is as a resistance here. So this be our entry just above the open of the day, low of the previous day. Yeah. But for now, let's see how the market is reacting toward this area, because it's already past our low of the previous day. So we are looking for its reaction, or how the price will be printed, and then through that information you can decide if it's a continuation. Remember, you are looking for either continuation or a reversal. But because of this displacement here, we're looking for a bit tracement into either fair value gap and then a continuation. So let's go and look at 5 minutes, see what's going on. Remember, I'll be streaming each and every day. That is from Monday to Friday on New York session. That is 8:30 a.m. in New York time. And if you're Kenyan, it will be on 3:30 p.m. From 3:30 p.m. to 11. 3:30 to 5 p.m. On New York session is 8:30 to 11 a.m. So you see on a 1 minute time frame, there is something here. Here we have a bearish order block. So if our analysis is correct, we are waiting for market to retest this bearish order block and then continue going downside. So this most probably will be a continuation price movement. So vertically it will be, our short will be somewhere here. Then our stop loss in the break of market structure, and we aim for 1:3. So let's go and look at the Euro USD. So USD has confirmed on our movement, that is the continuation. But remember, this strategy worked well when the market is behaving or reacting in Newyork session either on the low of the previous day and the high of the previous day that we have seen on the USD card. Because the New York session on the market is just trading on the low of the previous day. So we're waiting maybe on 9:30 and see the reaction of the market, and that will be a very good setup. So on the Euro USD, we are not yet. We are still on a neutral position on Euro USD. So right now it's 9 a.m. New York session. Just go on the lower time frame and see how the market is printing its candles. On a 1 minute time frame. So here there's a fair value gap here. Some sell-side liquidity. Let us label it at 1 minute. Sell-side liquidity. So there's a high probability the market is going to take out this 1 minute sell-side liquidity. As on a higher time frame, on a 15-minute time frame, remember our bias is still to come, and high probability the market will come out and take out this low of our previous day. So this is the 1 minute sell-side liquidity. So if on a bearish move, if on a bearish market should not pass through this point. See how the market reacted to this point. Very interesting. So on the if the market take up this low, is the high probability going to take out this low here, because both there is sell side liquidity, and also here sell side liquidity. So let's see how the market is reacting in this place. Uh, but for 15-minute time frame, the 15-minute candle is about to close. Remaining 1 minute for 15-minute candle to close. So that might happen next. Let's see. So let's see how the USD card is behaving. Let's look at the 1 minute time frame. This setup will be high probable if the market could have retraced to fair value gap, but it can retrace here in the bearish order block and continue its movement. So just have to wait. And that not yet, and that. So let's see what dollar is doing. Remember, today is Friday, so the market movement is slow. There's no any news, so just a slow printing of candles. Here is the fair value gap here. Between this price point here and here. This fair. That's why the market is reacting to this point. See the body of the candles are inside this area. So if we can, the market can take out this sell side liquidity or pass through this fair value gap. No, we are on a bearish move, heading to our sell side liquidity here or daily low of the previous day, which is here. And let's wait and see. See that this the the price point I told you is very interesting. Yeah, it is. So let's look at 1 minute time frame and see what's on. So the market is just consolidating on this area. So for now, the direction is still neutral because using our strategy, we look at the high of the previous day or low of the previous day. And through that, we are able to know the next direction of the market. But for now, the market is still just few its opening price here. So because now bearish and has been displayed, let's see what is on. So the look of the things, the market is reacting on upward move. So which means we might be heading to the high of the previous day. This might be our target now. Let's see. So okay, this favored gap was a very interesting area. Okay, because okay, can say here. Let's look at the 1 minute time frame. So this was the move from here, from this fair value gap. Another here, this was a breaker. It acts as inversion fair value gap. Remember telling you this was an interesting point? Yeah. When the market broke it, it acted as a resistance. It's breaker. The time is 9:35 a.m. New York session. So if you are to take out the buy side liquidity which is lying above the previous day high, we should retest at this point, this fair value gap here. Let us look at 15-minute time frame. So looking at the market, there is a high probability that we are going to take out this buy side liquidity, which is the high of the previous day. There's not that smooth price delivery. Day is the day we call it is a high resistance price delivery day. It's Friday. This is a breaker. 1 minute breaker. 1 minute breaker. This is our target. Let's look at DXY. Let's see what is going on DXY. Oh, so obviously we're heading to our previous day low. There's a fair value gap here, so there'll be a reaction on the market. And here is a bearish order block. That's why there is the reaction of the market. So let's just wait and see. So, look this. The market should not. We're waiting for reaction. This 1 minute breaker. And there we go. The market is heading to our take profit, our target. But generally, using our strategy, now will be the time that we should start checking out, because our strategy works on the high of the previous day and the low of the previous day. But this model have two setup or three setup, whereby these key levels low of the previous day might act as a target, or the high of the previous day also might act as a target, or they might act as a key point where the market will react from and then head to a daily or a higher time frame key point. So it's good to know that, to note that. So hypothetically, this would be our trade, taking it from there. From the high of the time, this will be our setup. From this fair value gap, which was here, then our stop loss will be the low of this swing here to a target. Should be a 1:3. There we go. So there still will be a trade here. Now, coming to our high of the previous second day high, which should be around here, down there. There's a buy side liquidity here. So there we go. This been a very good session, a very good learning session. I have the previous second day high. So that will be the next price point where the price is heading to. So thank you, fam, for being with me in this live tape reading. I hope you have learned something. I hope you have taken some value in you. Yeah, and we'll see you on tomorrow. I can do some back testing with you so that you can be able to understand the setup of the strategy, which is from 15-minute time frame, which we look at the high of the previous day and the low of the previous day. Told you the market is likely to run to these places because there is liquidity which was left, and the market worked on algorithm which work on those liquidity. And so you see here the market didn't actually hit high of the previous day. It left some liquidity, then came down again, didn't hit on our low of the previous day, and so there is a break of market structure here, a return to a fair value gap, and yeah, that's our entry and right to the high of the previous day. So if you can't see clearly on a 15-minute time frame, we go down to 1-minute time frame and try to understand what was going on the macro perspective. So the break of market structure happened here. There's a return to a fair value gap here. That's our entry and our stop loss on the low of the previous day, and we aim for the high of the previous day, our target. Yeah, that was our 1:3 setup. So actually the market may be heading to this high of the previous second day, and I mean second day is now we are on Friday. Second day will be going backward, will be Thursday is the previous day. Now second day will be Wednesday price action. So here we go. Wednesday price action. The market may be heading there. There is a high probability the market is heading here, our next target. So thank you for being with me. See you on the next one.